Hello, welcome. This is module 3, part 2. Now I'm going to be back testing some futures. I'm going to be back testing the NASDAQ. Let me let's go back to March 25. Let's go into 5 minutes. See, the market's clearly going up, so I'm going to be looking for a buy. Okay, swept this candle right here, so I'm going to take a buy from here. All right, perfect. So I just had these two levels here, but I'm starting to see this candle right there, which I don't really like. Just one, it just gave me one and it just stopped right here. So I'm going to take my profit right down here. It's also good to know when exactly to take profits. Like if I'm winning a trade and I see these just over exaggerated wicks, I'm out. I'm taking my profit. Even though it might still go up, you know what I'm saying? I'm still taking that profit. Okay, now let's skip to the next session. Very over exaggerated candle right here. Let's see if the buyers are stepping in. All right, so I'm seeing that the market is starting to show some weakness. Let's get some more proof. Let me see if we can sweep below these levels down here. See if we can sweep below here. All right, I'm starting to see that the market is now breaking the highs. So one more proof, one more confirmation. Okay, so now if the price breaks below this candle, I'm going to be looking for a sell. And I know it's late in the market, so let's see what happens. And take profit doesn't matter. We're just going to try to trail this up. Didn't put me in, didn't put me in. Let's see if you can sweep above this one. Swept above it, but kind of weak. I'm going to skip this session for the day. Let's go to the next day. Starting to see that range, that weakness. You see definite proof that this is not going to go up any further. Breaking the lows. Looks like sellers are stepping in. Now I'm starting to see what I like to see. If this gets rejected, I'm going to take the school run on the downside. Didn't get rejected. Skip the day. Next session. All right. Lows are not being swept down here. Let's see if we can come back up a little. See if we can test that level again. We can see something very nice here. We can see that the levels are not being broken from the top. So I'm going to be taking the sell on the downside once I'm going to take the school run right here. Once this level gets broken, because we can see it's not, so started closing up here. All right, let's see if we can sweep above this level. It's not closing above the high, so I'm going to try this school run right here. If it goes here, I'm going to be in automatically. Let's see, let's get this. Okay, I'm in. Nice trade right there. Trail this a little bit. I essentially got very lucky right here. Very nice. Bam, and I'm out. 1 to 3 risk reward. Good trade. We notice exactly. I like to see these are actually the only setup I really like to see. I like to see when the prices are not really closing, or if we see that it's if the price is going up, we want to see first the sellers getting stopped down, then maybe taking the buy on the upside. So it's a pretty nice trade right here. So let's skip to the next session. I want to see something like that happen again. So right now we see the market's already going down, so we're trying to anticipate a sell. We noticed that this was not broken. And let's see if this up here could get swept, right? Want to see definite proof. I need to see it back up there one more time. I'm still noticing this is not being swept, so that's pretty interesting. Now I'm going to have to take that buy. Once it flips up here, one more time, comes back to this line. I'm going to be in this market. I'm just going to risk this down here. Go for a 1 to 2. Risk for reward. Or trail the candles, whatever the market gives me, right? But I have to come back to that point first. Didn't bring me in, didn't put me in. Swept the lows down here. So I'm going to take that sell down here. I mean, before I take that sell, I already see that when I see the level is swept and then it just closes like this, it's kind of risky. So let me let the market establish itself one more time. Okay, buyers are coming in. I'm going to be in this market once it sweeps the high up here. So once it comes up here, I'm automatically in for a buy. I'm going to just risk not too much. Let's maybe try to get up a 1 to 2. And I'm in. Nice win. I won that trade. We noticed that the buyer stepped in. We get in these big candles. The move down was kind of weak. So this is, like I said, I look for two setups basically. I also look for the lows. Well, three setups. Well, I either look for the lows not being broken, and we get the school run. This one in this case was this setup where we have, for example, this right, and then it shoots down, comes back up with nice persistence, with nice candles. Like if it would come up with weak candles, we will technically still look for a sell. But since it came up with nice candles, we take the school run right here, or we have the setup where we have the market like almost doing something like this. We take the school run right here. And if I invert the scale, same thing, same principle. These are the only three setups that I take. I mean, it's basically the can close at the bottom, the one that stops the masses out, the one that stops the masses out, and then comes back down or up with nice big persistent candles. Yeah, that's basically what I'm looking for. So let's go to the next day. Market's going down, so we're still trying to look for a sell in this market. Unless it gives us nice persistent candles. So I'm just looking, I'm not trading what I think, I'm just trading what I see. See these nice candles coming in. See this market right here wasn't closing, so this was pretty much a dead giveaway. That's what I like to see, those nice big candles coming up. So I'm in the buy. I'm in the buy right here. This what time is this? 14:15. Now I won't get in right at 14:15 because I know there's probably going to be news stepping in. So I always make sure if I go on the 28th of March 25 on Forex Factory, let me put a March 28th. Put on March 28th. Yeah, we have core PCE price index at 130. Nice persistent candles to the downside. Didn't really close below this level. Let's see. So I'm going to take whatever level gets put out. So wherever it stops out, that's where I'm automatically going to be in, right? So I'll be in right here. I'm gonna keep my stop loss short, just this candle. Maybe take go for a 1 to 2 right down here. See what happens, and that's a win. Clear, nice winner right here. And if you was trailing this market, like I said, your entry becomes your stop loss, right? So let's pretend like this bottom right here is my break even. So I'm just going to lock in any profit that the market gives me. This is a perfect example that a lot of times you just take what the market gives you if you trail the candles, and if it just goes beautifully your way, you can just always put it behind the last candle, put it behind the last candle right here. Look, it goes down even more. Put it behind the last candle, last candle, last candle. You know what I mean? And this is where you would have been stopped out. So this would have been, if you were trailing the market, you would have had a 1 to 5 risk reward, right? This is why I like to trade futures, because futures is just, I feel like there's less manipulation in futures. In forex, it's just so much manipulation. There's prices going everywhere, so manipulated. But with futures, it moves smooth and beautifully, and you make more money. So like most of the successful traders, they all deal with forex. You know. So yeah, this is part two to module 3.